Ladies and gentlemen, welcome back to the channel. In today's video, we're going to be covering Jerome Powell, the Fed. What in the world happened today, okay, in markets? Pretty volatile day overall. And yeah, we really need to talk about this. So, I don't want to waste your time with a meaningless intro. Hit the like button, subscribe to the channel. Check that link out down below if you guys want to come trade with us, come invest with us in these under-the-radar AI stocks. And let's get started. Now, part of the big news today is the Federal Reserve says it will end quantitative tightening, thus stop the shrinking of its balance sheet by December 1st. Okay, this is important. We've talked about this before because when the Fed is selling assets off of their balance sheet, that is putting downside pressure on bond prices, which has an inverse correlation to yield. So that downwards pressure in the price of bonds, because the Fed is selling, that keeps rates higher, like 10-year treasury yields. So this should help yields trend lower over time. Now, the Fed voted in favor of cutting rates today, which was widely expected. It was 10-2, so 10 people approved, 2 dissented, with Fed Governor Moran preferring a 0.5 percentage point cut and Kansas City Fed President Schmid preferring no cut. So one Fed official said no cut at all. Moran said we should cut rates 50 basis points, and 10 other Fed officials said 25 basis points is right. So kind of a surprise on the no cut by Fed Schmidt. Fed says uncertainty about the economic outlook remains elevated. Before we get further into what Jerome Powell said today, other news headlines, I just want to make it very clear. The big story today for markets is really going to be around earnings, okay? The bull thesis on why I think stocks are going to rally is largely earnings. Okay, volatility collapse. Now, Jerome Powell is outgoing in a couple of months. The Fed ending QT, that's positive. The Fed cutting rates, that's positive. Okay, and there's many other positive headlines we're going to talk about. But Wall Street really cares most about earnings right now. And you have to get that out the way. Plus, we have the meeting between Trump and President Xi tomorrow. When the Fed, earnings, and the Trump-Xi meeting is over with, by tomorrow, Friday, there's going to be a lot less uncertainty, which markets hate uncertainty, and that's going to lead to an upwards buying pressure in this market, in my opinion. Now, what's also interesting, the Fed says beginning December 1st, we will reinvest all mortgage-backed securities principal payments into treasury bills. That's kind of like QE, where the Fed is actually buying assets. So like, that's even more bullish than we thought. So, yeah. Powell says that data available suggests the outlook for employment and inflation have not changed much since the September meeting. Now, one of the big headlines today that sent markets lower after Powell was Powell says that another cut in December is far from assured. He says December's cut is not for sure, far from it. Powell goes on to say, further reduction at December is not a foregone conclusion. And traders are paring bets on a December Fed rate cut, now seeing a 71% chance, down from 90% previously. Jerome Powell says that today's cut was risk management. Now again, I want to reiterate, while a lot of people are going to react to Powell, the fact of the matter is he's out of here in a couple months. It doesn't really matter what Powell says, for the most part. Jerome Powell says that labor demand has clearly softened. Powell says available evidence suggests layoffs and hiring remains low. Powell says prior to shutdown, the data showed economy may be on a firmer trajectory. Now, Michelle Bowman today, right before Powell started to speak, said she is not so concerned about inflation. I was like, okay guys, in the trading community, I was like, this is a crazy headline, okay? Michelle Bowman says that Powell is losing his grip on the Fed. Michelle Bowman says, quote, think you have to put Besson in the Fed. Have him lobby. Huh? like, kick Powell out the Fed early? Like, there's a little bit of confusion around that headline, but clearly she is unhappy with Powell and says that he is losing his grip on the Fed. Okay, now I see why she said that, now that we heard what Powell said. Powell says a reasonable base case is that tariff effects on inflation will be short-lived. And again, Jerome Powell says that today's cut was risk management. Powell says we can't address both employment and inflation risks with our one tool. Jerome Powell says we are not seeing an uptick in claims or a downtick in openings. That suggests gradual cooling and gives some comfort. Jerome Powell says if we see labor data, or the labor market, essentially, that is stabilizing or strengthening, it would play into policy decisions. Powell said there's little benefit in continuing to shrink the balance sheet, noting it's not worth holding on to get the last few dollars of quantitative tightening. He confirmed committee support for announcing a December 1st freeze in the balance sheet reduction, explaining the timing gives markets space to adjust. He added that if labor market data shows stabilization or strengthening, it would influence upcoming policy decisions. Powell again pointed to state-level claims data indicating current conditions remain broadly unchanged, giving the Fed a clearer short-term picture of employment trends. Fed Powell says for today's rate cut, a strong, solid vote, and the strongly differing views were really about the future. Powell says high uncertainty could be an argument in favor of caution. So you hear these headlines and it makes sense why Bowman says Powell has lost grip of the Fed, and essentially like Bowman should come in and start taking things over, which, I mean, if Bowman's saying that, you're probably going to hear Trump start to make some crazy headlines in the coming hours. But again, as I've said on this channel for days now, Jerome Powell and the Fed, it doesn't really matter as much for the broader kind of bullish narrative that I've had, right? It doesn't all hinge on the Fed, especially since Powell is going to be out of here pretty soon. The big thing is earnings, right? That's what Wall Street is nervous about. That is why the VIX EQ is so elevated right now. The VIX EQ is equal weight. Now, one member of the trading community said, hey, don't you know that, S&P 500 VIX EQ is S&P stocks, not the Russell. I've been more bullish on the small cap AI area. And I explain it like this. Yes, right? The VIX EQ is equal weight of the VIX, of the SPY. So basically, people are really fearful over single stocks right now. Okay, this has to do with earnings. You can see just how elevated we are with 50-60% of the total fear that we had back in the April crash. Okay, kind of unusual considering the VIX, while it did obviously go up today, is sitting at lows, right? You are not fearful in the headline VIX, but you're very fearful in equal weight. Now, I'm assuming we don't have an equal weight VIX for small caps. That just does not exist, okay? I'm assuming the small cap equal weight VIX would show you a lot more fear than the S&P equal weighted VIX, okay? So when you get this volatility collapse over the next 24 hours, really heading into tomorrow, once we get big tech earnings today and after hours, and the meeting between Trump and China tomorrow, and presumably positive headlines that come out of that, volatility collapses, buying pressure starts to really kick in. Jerome Powell says the Fed will be adding reserves again at a certain point. So that's basically suggestive of QE. Adding reserves again is like buying assets. But Powell says we want to move the balance sheet to a shorter duration, have not decided the endpoint. Powell says directionally the CPI was a little softer than expected. Jerome Powell says that inflation away from tariffs is not so far from our 2% goal. Powell says maybe 5 or 6/10, which does set up something pretty interesting. Trump's going to be talking with China, and Trump said last night, potentially, they're going to be reducing the fentanyl-related tariffs. Tomorrow, it could make what Powell is saying today quite irrelevant, even more irrelevant than it is already. considering Powell's going to be gone in a couple of months. Jerome Powell says we've moved 150 basis points, now in the range of where many estimates of the neutral rate is. Powell says they will be watching layoff announcements very carefully. Powell says much of the time the layoffs are about AI. Yes, I could have implications. It could have implications for job creation. Powell says, I am not committing that we would need to slow down, but you could imagine it. Then Powell says, driving in the fog, you could slow down. Powell says he could imagine the shutdown could affect the December meeting. Powell said that investments in data centers and AI are a quote-unquote big deal, adding that much spending isn't particularly sensitive to interest rates. He noted that the ongoing government shutdown is limiting the Fed's ability to get a clear, granular view of the economy, but emphasized that the disruption is temporary. Powell acknowledged the lack of data could influence the Fed's December decision, comparing the current situation to driving in the fog, suggesting policymakers may move cautiously. Powell says there's a sense from some, let's pause. Powell says consumers at the lower end are struggling, buying less. So it does seem like there is quite two-sided Fed right now. There's some Fed officials that want to continue to cut, and there's a lot of others that say they should pause. But again, to me, none of this matters, okay? The major events are earnings and Trump-China meeting, okay? Again, Powell is outgoing in the next couple of months. Markets have done very well with the Fed pausing for a year after cutting 50 basis points back in September, a very political move. The markets did just fine. The markets are going to do just fine with or without the Fed complying, okay? Even you could make the argument in recent weeks, small caps have not reacted at all to the Fed's upcoming rate cuts. Small caps have sold off, okay? Because of the uncertainty, the rise in equal weight volatility in the S&P, does this really surprise anyone? Not really. Does it change the bull thesis? Absolutely not. Powell says there is a growing chorus of feeling we should maybe wait a cycle. Powell says demand for workers has fallen a little more than supply, and our tool supports demand. So there's a lot of just really back and forth headlines today. And again, I can see why Fed Bowman took some pretty serious shots at Powell today. I could imagine that meeting of the Fed over the last 2 days was pretty tense. Powell says it takes a while for tariffs to get to consumers. But again, tomorrow we may hear of lower tariff rates on China. So it's not even a guarantee that the rates we think today are going to actually stick around. Fed Powell says basic expectation is some additional tariff inflation. Powell says we could get 2 or 3 or 4 more tenths of inflation from tariffs, but should be one time. So again, I can read you a headline and it sounds bad, and then the next headline sounds good. Powell is all over the place today. Powell was asked about equity prices and says it's not our job to look at any one asset. Powell says inflation is still very much making people unhappy. Powell says it will take some time for that to wear off for real incomes to rise. Jerome Powell says on AI, this is different from the dot-com era. Powell says there was a clear bubble back then. Now we do have, again, big earnings today. Meta, Microsoft, Google, others like Chipotle, Carvana, ServiceNow, Agnico, Eagle, Sprouts, Mercado Libre, and Starbucks that will be reporting earnings. Tomorrow morning, Eli Lilly, Merck, Comcast, Roblox, Baxter, Advanced Auto Parts. Thursday and after hours, Amazon, Apple, Coinbase, Reddit, MicroStrategy, Rocket, Riot, Cloudflare, and Roku. Now, again, today and after hours, Meta, Microsoft, Google, those are going to be the big ones, okay? Once you get these earnings that come out, uncertainty is going to collapse, okay? Because we have certainty. I'm sure we're going to hear good things and further investments into AI, blah, blah, blah. I don't think any of that's going to change. We're going to talk about earnings in the next video, so stay tuned to the channel for that. But likely early tomorrow morning, we're going to start getting headlines from the Trump-China meeting. And what those headlines are, I imagine, are going to be good and mixed with good earnings, good China-US headlines. You're likely to see volatility collapse in the VIX EQ and stocks that are going to move higher. Okay, I think the small cap AI arena is going to be one of the biggest winners tomorrow. But then again, you do have earnings from Amazon and Apple that will come out on Thursday. Getting through the Fed shenanigans was part one and the least most important thing for the markets. I view this the slight sell-off that we're seeing after the Fed as an opportunity, and that's why I did take advantage of it. But in the next video, we will be going over all of the big earnings, my expectations for tomorrow, and much more. So stay tuned to the channel for that one. The news today for Tesla. Tesla expanded their geofenced area for the first time in 2 months in Austin. Comparing this to Waymo, you now cover pretty much all of Austin, okay, and many suburbs around Austin. Musk says, please take a moment to vote your Tesla stock. It is super important. Control of Tesla could affect the future of civilization. Now, Sawyer Merritt put this out that says, here are Tesla's current 5 largest shareholders, excluding Elon Musk, and how they voted in last year's ratification of Elon's 2018 pay package. Vanguard, that holds $115 billion in Tesla, voted for. BlackRock voted for. State Street voted against. Fidelity and Geode Capital voted for. And JP Morgan Chase voted for. So you're probably going to see basically the same investors vote for this package. Even more so this time, State Street might actually vote for the package because, you're looking at Tesla potentially hitting an $8.5 trillion company. Like, all of these firms would make a lot of money. You're talking hundreds of billions of dollars each if Elon is successful. So why would they not vote for it? It would really make you wonder. Tesla has announced that lease pricing will be increasing in the US by up to 23% for the Model 3, with smaller lease price increases for the Model Y and the Cybertruck all on November 4th. Bank of America has raised their Tesla price target to $471 from $341. They say, quote, overall, we find that Tesla's core automotive business represents around 12% of the total value, while robotaxi is 45%, FSD is 17%, energy generation and storage is around 6%, and Optimus is 19%. But that's a huge price target increase for Tesla. Now, the expansion in the Austin area was a 44% expansion versus Tesla's previous geofence, and it brings Tesla's total Austin robotaxi service area to 243 square miles, 3.7x larger than Waymo's. Now, despite Jerome Powell and some of the whiplash you're seeing from the Fed today, Tesla stock at the time of recording this video at 3:20 p.m. here Eastern Standard Time is up 0.2%. So Tesla, in spite of that, is still having a green day. You have 83 different trades today from hedge funds and institutions, totaling $48.5 million. There's not a lot of dollars trading hands today in options in Tesla, and I think that speaks to the uncertainty right now that investors face, and hence why volatility is so high in equal weight stocks in the S&P, because volatility is so high. Now, the positive order value today is 68%, so the numbers do look good, but they're very low. Now, you do have about 140,000 shares that are being covered in Tesla stock today as well, with the short interest that continues to decline, going from about 3% recently down to 2.5%, and you currently have 72.5 million shares that are sold short. So again, I'm just viewing this as an opportunity that I took advantage of, okay? I like to take advantage of market opportunities. So let me know your thoughts on this down below in the comment section, okay? Really, the conversation shouldn't be around the Fed today. And I know that's a very difficult thing to hear and to even say, because for so long the Fed has been important, but Powell is outgoing. Nothing really changed today. Okay, everyone deep down knows that if the situation changes, the Fed's going to change what they're going to do, right? If inflation skyrockets, the Fed's not going to be cutting rates. If the economy crashes, the Fed's not going to be paused, okay? We didn't get any new information today. Just really the Fed saying the obvious. Now, the Fed was, again, never the catalyst this week. This market rally did never hinge on the Fed. It really hinges on earnings. That's what Wall Street has been nervous about, is earnings. You can make an argument that the Fed just getting out of the way clears some uncertainty, which far is more bullish than, the bearishness the Fed caused today, okay? And really the big catalyst is earnings and Trump China. If Trump China, maybe even this night, tonight, if not tomorrow morning, comes out and they're saying some very positive things, fentanyl tariffs being reduced, China's going to do this, do that, trade deals approved. We don't know what the details of that even look like, okay? Then that's really what is going to fuel this market. So hit the like button as well as subscribe to the channel if you have not done so already. Ladies and gentlemen, we'll be back in just a few with another critical update for you. Come join the trading community if you guys would like to. Link down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.